Hello and welcome to yet another Equity for Kids video. In this video we're covering Schaeffer's investments research, their chart of the week, and this piece was written by their CEO Schaeffer. He's also the founder as well, and he began by saying cloud computing name Akamai is one of the many stocks suffering volatile swings during the past 2 months. When trading such unsteady stock market climate, it is important to gather ample support behind any decision when it comes to your portfolio. One way, according to him, we gauge what a potential pullback means for a particular stock is through its moving averages, specifically diving into the historical data to identify any trends that could signal us toward the equity's next move. Below, according to him, we'll take a look at the bull signal flashing for AKAM, Akamai, or why now may be a good time to bet on the stock's next move higher. To meet our criteria, according to him, the stock must close above the set moving average 60% of the time over the past 2 months, in 8 of the last 10 trading days, and be within one standard deviation of said trend line. According to Schaeffer's quantitative analyst Chris Pribal, Akamai Technologies stock has come within one standard deviation of its 200-day moving average. The security has seen 2 similar pullbacks within the last 3 years, of which have resulted in an average 21-day gain of 6.3%, with 100% of the returns positive. At Akamai's Thursday close of 97.71, a similar bounce of that magnitude would have the stock trading just shy of $104, a cheap shot from the stock's 20-year high territory. Digging deeper into the IT and consulting giant's technical background, the stock has climbed 11% in 2020, and earlier last month touched a 20-year peak of $108.25 on April the 20th. The aforementioned 200-day trend line has captured multiple setbacks from the stock since early December, but most recently caught a brief drop in early April. Another floor of support for the shares long term has been the $84 mark, a key level during the equity's notable mid-March drop. Lastly, now looks like an opportune time to get in on Akamai's next move with options. Schaeffer Investments Volatility Index of 34% stands higher than 20% of all other readings from the past year, implying the near-term option traders are pricing in relatively low volatility expectations. Okay, we have already, this is their chart of the 200-day and that of the price curve. The price curve are the bars, and then the line is the 200-day moving average, and we already have done the same here. We have this is the 200-day moving average, and the other ones are the 50 and the 20, as the case may be, and the exponential, but they're not relevant in this video. We're just going to look at that. So we're comparing what they have done and what we are looking at ourselves. So from what the analyst is indicating, this is a one standard deviation from this. That's what it looks like. We haven't done that analysis ourselves, but we're going to go by that. And then in the last 20 days, we'll be going back all the way to March the 1st. So March the 1st is there's no March 1st, so we'll go by 2nd of March. So that will be here, and then as at that time it closed above the simple moving average, but by the 9th it was already below that. So when did it cross above it? It was sometime in the 24th of March. So 24th of March to the 1st of May, they covered, theirs was the 30th of April. So we are looking at, because this covers the 1st of April or 1st of May, so we're looking about roughly 37 days, which includes the weekends. So, and 37 days is just above, just right on the nick of 60% of 20 over 2 months or 60 days. So it has roughly met that criteria for them, I guess. And so the other criteria is 10. It must have also traded 8 in 8 of the last 10 trading days. It must have closed above that trend line. So obviously in the last 10 days it closed above it. So you can easily see for yourself that it did. So what other criteria was mentioned? The standard deviation, we didn't do that. We assume that as correct. So so they're saying here that it has climbed 11% in 2020, even with this recent decline, I guess, suppose. So if you look down here at the MACD and the price, the signal line, the MACD has crossed over when that decline started to occur on the 28th of April. Yeah. So it crossed over the signal line, and so in other words, they're speculating that the reverse will be the case. The signal line might cross over the MACD in if everything goes as they have speculated. So let us also have a look at this and see. We have here short here and short squeeze. We have short percent of float of 3.63%, an increase of 5%, and that figure is 5.7 million, which is a value of $553 million, which is the amount of money that may not be. That may be part of what will go up. So if you add that short figure, and also the fact that analysts themselves, a lot of analysts would have also done this analysis and may have also come up with this. So we know that sentiments do impact on the markets and the various equities. Just as of late we have been hearing from, and we know that's the fact, from the likes of Rubini, that the stimulus, which is real, it's not a sentiment. It drives the market. Obviously, when it comes into the market, it will definitely move it, whether you agree with it or not. And also the other one, the sentiment, or the expectation that there will be a recovery. When you combine these two, the market will definitely move. One is speculative or expectational, and the other one is real or tangible. So in this case, we have the tangible, which is the short interest, which is about 553 million, and then the other one is the expectation, going by the fact that this trend has occurred before. It says here the circuit has two similar pullbacks within the last 3 years. So even though it doesn't look like a lot in the past 3 years, but at the same time, it tends to, it may also give it some 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 oomph. The fact that it doesn't occur all the time. It may be a once in 3 years or twice in 3 years occurrence. Some people might deem it, yes, it's a trend that doesn't always happen. So it's not. Yes, it's not. It's not. It's not. It's yeah. That's the sort of randomness. So that's a sentiment. So if you combine that, I would say yes, you might uh, consider Akamai a buy. So I wouldn't say don't buy. I would say yeah. There are signals there. There are very good reasons we have outlined. One is so tangible, the other one is not so tangible. So I wouldn't disagree that this is not a buy. Okay, thank you for watching this video, and please do subscribe to our channel. Thank you very much.